All right, in today's video, I'm going to share with you everything you need to know about the Wheaton housing market. Again, I'm Mike Thornton, a local realtor here in Wheaton. If you are searching and are not seeing all the private listings, please send us a note. We'd love to get you access to those in real time. Currently, there are 22 properties. These are all the private listings in Wheaton. These are probably not showing up on Zillow or Trulia, but we can get you access to those. So please send us a note. We'd be happy to get that over to you. Or if you're interested in talking more about a potential move here, there is a link for a discovery call in the description. But let's jump in. Today, I wanted to go back further and zoom out to, the 10-year view. And this is, I think, going to give you some sort of certainty, or at least nothing certain, of course, but at least a little bit more confidence on where the housing market may be going. Because as you remember, the housing market is a market. So supply and demand are the factors that matter when it comes to home prices and if they're going to go up or go down. If demand exceeds supply, pricing will go up. It's simple economics and vice versa. So what's interesting is 2013 is right when all those foreclosures were starting to dry up, and we started to get a little bit a normal market, or maybe a neutral market is a better way of putting it, where supply and demand were somewhat balanced. And you can see even in that environment, you had a slow appreciation, let's call it 2 or 3% a year, which is very stable, very healthy, but home prices were going up. In this time frame, we probably had 1 million homes for sale in the US at any given moment in time. Fast forward, you have a situation where you have now 10 years of a gap between what home builders should have or could have or wanted to build versus what they did build because of that financial crisis. Many got out of the business or built less or lost their businesses. And so depending on your source, we're short 3.5, 4 million homes in the US. Then you throw gasoline on the fire of COVID, where you had artificially low interest rates. You had 20% of all purchases in this time frame that were investors. You had the Airbnb boom kind of take off. And when you think about investor purchases, it puts more strain on inventory because they buy something, but they don't release anything back into the inventory pool. So you have the U.S. is short new homes builds. You have investors going crazy. And you have the scenario really where that's created this systemically low supply environment now that's going to be really, really difficult to get out of, where now at any given moment in time, you might have 350,000 homes for sale in the U.S., which again is like a third of what we typically would see. And that's the reason why you have home appreciation going crazy. The only reason it was tempered a little bit last year is because rates were 8% versus where they were in COVID at 2.5%, 3%. But even when rates jumped up, you still had appreciation. And that's because if you take demand and you take it down by 20%, but supply is still, here on the floor, you still have demand exceeding supply. So you're still going to see home prices go up. Now it was just more modest, actually more sustainable too, because during COVID, you had home prices going up 10 to 15%, and that's just not sustainable. But this gives you an idea of where we're going as well. We would have to quadruple our inventory to be in a scenario where we were even in a neutral market to where home prices would be flat. There is no story to tell that I can find to suggest home prices would go down. We just don't have the inventory, and it would take years and years to get that inventory, whether it's builders building like crazy or it's investors releasing all their inventory back into the pool of homes for sale, which I don't see happening for a very, very long time, if ever, because they are locked in at super low rates. So their fixed costs are locked in and rents continue to go up. So what you can expect home prices to go up. I think they're going to go up roughly what they did last year. Let's call it 4 to 6%. I think you're going to see a few more transactions in the marketplace because every half point interest rates come down. The thought is that it releases some additional sellers back into the market that feel better about trading out of that lower rate into that higher rate. And so let's just to say that 8% down to 6.5 will bring, 15, 20% more sellers back into the market. That will mean more transactions. The demand will immediately snatch up that inventory. So we won't see an inventory build, but we'll see more transactions, if that makes sense. But we are starting at such a low baseline. We are the lowest inventory position we've ever been currently here today. We've never been below 2,000 homes for sale ever in DuPage County, and we're only at 1,455 right now. So it's insane. So the starting baseline is really, really low, but I do think you'll see more sellers from a sheer number hit the market in the spring versus what we did last year to kind of help that transaction count. One day we'll wake up 3, 4, 5, 10 years from now, and people will have traded out of that super low rate, which will help the market move a little bit. But we are many, many months or years away from that. So expect much of the same in the housing market this year. You're going to have to be very savvy to get the job done. You're going to need to work with somebody that knows what they're doing. So if you need a referral or connection, or if you want to talk to our team, again, check out the description. We can get you some resources. Have a great day.